Good day traders, welcome to the RMDTRADER Weekly Market Fix. My name is John Jacobs and this week we are looking at some of the chaos that's unfolding in the markets and also how we can best position ourselves to navigate these volatile markets. As per usual, we will start by having a look at two of the specific trade setups that we put out last week, that is on our Twitter as well as on our Telegram channel. First of all, we had a short setup that we put out on GBPNZD. By the time we have put it out, we have not yet reached the entry zone, which was between 1.944 and 1.953. And also we had this long trade setup that we put out on USDJPY, which was right in the entry zone by the time we have put it out. Having a quick look at how those have been playing out so far, we can see by looking at the GBP NZD, we have now entered into this entry zone, and for now we are looking at a reversal into the direction of the primary trend. We are currently in a bearish trend, and looking at our market phase, we are currently in market phase 3, so we are expecting a correction and a reversal very soon. From this area we are in currently, we have our stop set at 1.969, and the reason for that is we are not expecting the market to make a new higher high based on the previous swing points, but instead to move lower, break structure lows and actually create a new low. So there's actually a very good chance that we can expect a target somewhere closer towards this area at 1.903 to 1.896. So what I'm going to do is I'm actually going to adjust our targets for this specific setup alert, as I think that will give us an even better risk to reward ratio. Secondly, we had a USDJPY long trade setup that we have put out. Unfortunately, it does appear that based on that exceptionally large bearish candle that we saw on Friday, that there is a good chance that we will be stopped out on Monday. I am still bullish on this pair despite this big engulfing and reversal candle. We are still in an upwards or a bullish trend. We can see we are trading above our daily 50 SMA as well as our daily 100 SMA, but let's see what happens on Monday and early in the week. Maybe we get a very strong reversal back in the direction of the primary trend, or we get stopped out and we will look for another entry into this trade setup. Looking at some of our other Forex pairs, we also had a running entry on our EURUSD for a long setup. This one also unfortunately stopped out, and I believe it could be that we are still looking for that bottom that was based on this larger double top formation that we've had identified previously. Also, it's worth noting that we are still in a downtrend in a market phase 3, so it's perhaps better to just stick to the primary market direction, looking for shorts into the direction of this trend instead of looking for those reversals, which obviously is giving us lower win rates. For this week, of course, if we do get a strong enough pullback into our areas of resistance, which would be, of course, that daily 50 SMA, that would be in the area somewhere between 1.149 and that 1.151, we could be looking for a new opportunity to get short and trade into the direction of the trend. Looking at the GBPUSD, this one we actually are still in a short trade, looking for that full target at 1.3268. There's a very good chance that we might have already seen that full target being reached. I can see we do have a shadow, and let me just adjust this target zone quickly, so we can see we have that shadow very, very close to our target. So there's a very good chance that this could have been the full target, but if not, I am still expecting more downside just based on this larger head and shoulders pattern that should be taking us towards a full target at 1.288 in the short term. It's good. There's a good chance that we first see market pulling back towards an area of resistance, which would be in this area of the new weekly R1 pivot at 1.344, and from there it's possible that we then see resumption and continuation in the direction of the trend. Looking at the EURUSD, we also had a running setup that was triggered. This one working out quite well at this stage. We were expecting a bottom to have formed. We also mentioned that we have seen some divergence based on those two lows, which is of course bullish. It was bullish divergence where we had price making a lower low, whereas our indicators and our MFI, money flow index, and RSI was making higher lows. So that was actually giving us a bullish divergence signal, and that is currently sending us towards our full target, as we've just reached our first target at 0.848. AUDUSD. The AUDUSD has failed spectacularly in our trade setup. We can see the market reached our entry area, and then from there just completely started selling off, taking us out from our stop loss at 0.716. Just looking at this bigger picture, we can probably notice that there's a resumption in this bearish trend. As we know, we were still in this market phase 4 of the bearish trend. So also the break of that diagonal is actually rather a trigger to tell us we are now having a short bias into the direction of the trend. The risk reward ratio currently is not favorable just to jump onto this trade, so I'd rather wait for some kind of a pullback, perhaps towards that 21 daily EMA in the vicinity of our breakout level at 0.723, and from there look for shorts in the direction of the trend. Briefly looking at the USDCHF, this one worked out very well. You can see that we had our entry coming very close, to our stop loss area, perhaps too close for comfort, and then we saw price moving all the way up to our target, and then coming back, we're back to the entry most likely. Just looking at the trend, we are still in a bullish trend, so this could just be a correction and a pullback. And based on Fibonacci levels, let's just quickly pull those up. We can see that we are currently just reached the 50% pullback with the 61.8% pullback, coinciding with that daily 100 SMA, which could present a good long opportunity, but we'll keep you guys posted in the week to come. Moving on to our indices, as we have expected, the NASDAQ did indeed pull back from that area of extreme, how can we say that, extreme exuberance that we've previously identified. So we can see how the market rejected this area, starting to pull back, and currently even trading below the daily 21 EMA. At this stage, it's starting to look a little bit like a head and shoulders pattern. So just if we look at it, there's your left shoulder, your head. This could be the bottom neckline with a new right shoulder forming somewhere in the area there. So one of two things will probably happen this week. We'll either just see continuation of this sell-off into this area of support between 15,300 and 15,700, where we have our daily 100 and our daily 50 SMAs, or we might see a correction towards this area of about, where's that, 16, I'm actually going to move that level towards about, where's that, 16,350, and from there see rejection to complete this head and shoulders formation, taking us lower towards this target level at 15,367. Looking at oil, Brent crude oil, very briefly, very big candle on Brent crude oil, taking us all the way towards support from the daily 200 SMA. So you can see how price is currently trading right on that daily 200 SMA, just slightly pulling it up back above it. We are also now in that 61.8 retracement area. So there could be an opportunity for a long trade into the direction of this trend. It's best to wait for a good price action reversal signal, but the risk reward ratio does actually favor a long position at this stage. But we don't want to catch any falling knives, so let's rather wait for a nice price action signal on the lower time frames, which of course will also keep you guys posted if I do notice anything. Moving on to gold. We have had a long setup put out previously. This one is still in this entry zone. I'm still bullish in gold, and I am expecting gold to start making its way higher once again. It would be, of course, very important for it to clear this entry zone and get above the new weekly pivot at 1,804. What I just want to do quickly is just to hide the previous weekly pivot, so it's a bit neater. There we go. So if we can get price moving higher again, there's a good chance we'll see continuation up, and I actually expect price to then perhaps even move higher towards this target area at 1,850 if we can start moving up once again, and our stop loss remaining at this level at 1,760. I'll briefly have a look at palladium. Palladium, I'm not sure if we covered this previously, but anyway, we do have this market phase 3 continuation still ongoing on palladium, with that break of the diagonal giving us a good a short entry opportunity, and you can see we are currently right back on support at 1,740 with a good chance of a pullback or a correction before we continue heading lower into the direction of this primary bearish trend. Finally, let's conclude by looking at some of our cryptocurrencies. The cryptocurrencies is currently right on support from the daily 100 SMA. I'd say this is a very important level of support, as if this fails, there's a very high probability chance that we'll go and test support from the yearly R2, yearly 365-day moving average, as well as the daily 200 moving average, all converging on this. Well, we can just say the 46,000 level. So 46,000 level, extremely important support level for Bitcoin and for cryptocurrencies in general, as the major altcoins typically tend to follow what Bitcoin is doing. If we do get a correction this week and we see price moving higher, there will be some resistance in the vicinity of our daily 21 EMA and weekly R1, that's at 58,000. And any rejection from here once again could see us move towards this area of support at 46,000. Just a brief look at one of the altcoins, XRP. XRP has also broken below important diagonal support. It's difficult to say whether we'll see a correction, a pullback towards that breakout level to test the yearly R2 at $1.02, or whether we'll see just continuation of this sell-off all the way down towards the first level support at 82 cents, or perhaps even all the way down to our yearly R1, which is sitting at 0.62, that's 62 US cents. That concludes our market fix for the week. Please remember to show your support by subscribing if by any chance you haven't done so already. Now for this week's pro trading tip. Remember, always be patient when waiting for the right trading setups, as it is better to be out of the market wishing you were in than being in wishing you were out. So until next time, wish you all the best with your trading, and remember, trade smart and trade successful.